the whole world is investing in the US, okay? Our economy, with its problems, is still the best economy in the globe. No ifs and buts about it. And we can tell by what's happening to retail investors, to global investors pouring money into the US. And the reason they're pouring money into the US is the belief that the US economy, out of all the economies around the globe, is the best managed economy. You know, you have debate about that. We can have a fair debate about that. Is it? Is our fiscal policy in order? Is our monetary policy in order? I don't think so, but you can't argue with what the markets have done over the last 2 years, right? And over the history. I mean, look at a 50, 80, 100-year chart of the S&P 500. What has it done? Nothing but new highs. Yes, it had its hiccups. Yes, it had the 2000 dot-com bubble, 2008 financial crisis, GFC, right? We had the pandemic. You know, that's a black swan event. Nobody was expecting that. But overall, if you just steadily invested and passive invested, you have done nothing but wonders. And the global investors, including the U.S. investors, pension plans, hedge funds, individuals, agree to it. And the money is pouring in. And except that there are warning signs out there. And the warning signs, could be ignored until they cannot be ignored. Okay. One of the major warning signs is the concentration or the breadth of the market. For the past 2 to 3 weeks, I've been closely watching the advanced decline line. While the individual indexes, such as the S&P 500 and the triple Qs, were making new highs, the advanced decline line is tanking, is reversing, meaning more than average number of stocks, for example, in the S&P 500 are going down than up while the market's going up. That means the generals are in the front lines, okay? The soldiers are not there. The generals are leading the charge. Well, when the generals lead the charge and the generals get shot, what happens? That's the best analogy I can come up with. So the US stock market is becoming even more concentrated. The top 10 stocks, think about this, now reflect a record 40% of the S&P's market cap. Think about this. There is 500 stocks in the S&P 500. 10 stocks are pushing this train. 10. What are the rest doing? They're not doing that well. And if you look at the Russell 2000 broader indexes, they're doing much worse. Now, this percentage exceeds the 2000 dot-com bubble by 14 percentage points. So here it is. I'm circling with my cursor. This is the 2000 dot-com bubble. The concentration of top 10 stocks was at 26.5%, 27%. We just hit 40%. Here's the oval. Take a look at it on the right side. And in 2024, these stocks have added, just these top 10 stocks in the S&P 500, added over 7 trillion in market cap and are now worth $21 trillion, okay? To put this in perspective, the entire European stock market is worth 16 trillion. We're talking the entire European stock market, Germany, England, and all the industrialized countries, right? And the market's rally is not broadening. And that's concerning to me. That really is concerning to me. And I've been watching the advanced decline line for the past month. Actually, advanced decline line is kind of foretelling a little bit more trouble. And so what happens when these 10 generals that I call them, and we all know, which ones they are, the 10 generals are leading the charge. Is it a good thing? It's not. But, I could have said the same thing looking at that chart 6 months ago, right? The concentration of top 10 stocks was, above the 2000 dot-com bubble. They were 30%, 35%. Now we're at 40%, right? At some point, the generals will be shot, or, nothing to see here, continue as it is. But when the corrections do come, they're going to be more violent because we are so concentrated. And what happens is that because everybody else, all the other stocks in the S&P 500 are not doing well, to raise liquidity, to raise cash. When there is redemptions in mutual funds and hedge funds, what do they sell? They're going to turn into selling the most liquid stocks, which are those top 10 stocks. So we'll see. Time will tell. I will just trade what's in front of me. I'm not going to argue with the market. If the market's making all-time high after all-time high with a few hiccups in between, look, buy the dip has been the thing to do for the past 2 years, every single one, right? And you would have done amazingly well if you bought the dip, and it seems like it's going to continue that way.